8% there. Now, joining me now for more on the outlook for the Australian economy and also what's in store for interest rate policy is Senator Helen Coonan, the Shadow Finance Minister, and Warren Hogan, Head of Australian Economics and Interest Rates Research at ANZ Bank, to take a look back at the year that was on the interest rate front. Warren, if I could start with you, does the RBA need to cut rates further, and does it have room to further loosen monetary policy?
Well, I think at the moment they certainly don't need to cut interest rates any further. The economy is actually doing exceptionally well by global standards and by anyone's expectations from 3 or 6 months ago. Do they have room? They do, and you can tell that by a number of indicators. One, of course, is that the level of our short-term interest rate is so much higher than most industrialised economies, and that is showing up in a stronger currency. So if the economy weakens in the next year or so and they feel they need to cut further, I think they will have the scope because we have that buffer over the rest of the world, and that of course assumes that global interest rates don't start rising anytime soon.
Senator Coonan, if I can turn to you, the opposition has criticised the infrastructure spending and the cash handouts that we've seen to the consumers, but the OECD this week has commended those kind of stimulus measures, saying that they are boosting demand. In retrospect then, would you still maintain that the government is on the wrong track with its stimulus programme?
Well, I think there's still a story to be told about just exactly how it plays out with this massive cash splash that the government has effectively distributed in the Australian economy. We have always been critical of the targeting of these stimulus packages. We've always thought that it should have been directed more to encouraging productivity, to helping small business, to allowing businesses to continue to employ people, rather than simply giving people cash, a lot of which was saved, some of course which was spent. And I note that the reports that we've been looking at over the past couple of days have cautioned the government against going for further stimulus rather than looking at monetary policy should it be necessary going forward. So we think that in the medium term it's going to be very interesting, certainly the way politics will play in Australia, to look at just what Australia and the Australian voter has actually got for this stimulus package. In fact, you'll find that while it may have put a floor under the economy in the short term, in the longer term it's created a massive debt that's going to effectively be visited on Australians for years to come.
Yes, just on that, Senator Coonan, the national debt in the G20 is likely to hit trillions of dollars over the next few years because of this government spending binge. How is Australia, in your view, going to get its public finances back in order? Is it through tighter budget discipline, more taxes? What's going to be the solution?
Well, certainly the first thing we have to do is to get spending under control. There's been $124 billion spent just by this government in just a little over a year, and the way in which debt is trending, we can see that we're going to have a debt in the order of about $315 billion gross, and of course we're now guaranteed state government borrowings and utility borrowings in the order of about $230 billion. That's $500 billion, and we've got to obviously have a situation where there's got to be growth, and going forward it's very difficult to see that the rate of growth, being a little over 4% for 6 years, is going to be easily achieved. I mean, even the Reserve Bank said that whilst the Treasury predictions were not, I think he said, the Governor of the Reserve Bank said they weren't crazily optimistic, the subtext there were that they were very optimistic, very ambitious, and clearly there's going to be quite a task to get public debt under control.
Warren, I've got to ask you about how concerned you are about this rise in longer-term rates, because we've seen this jump in yields in US Treasuries. What does that tell you? Has that increase been driven by expectations that the economy is turning around, or is this going to be a negative for the broader economy?
Well, so far I think the increase in long-term rates out of the US is the market's pricing out an Armageddon-type scenario and normalising, if you will. There's an expectation that the US economy will, at some stage in the next few years, recover. But at around 3.5% to 4%, the US 10-year bond isn't unusually high given the broader macroeconomic environment. But it is trending higher, and I think if we see that yield start to head towards 5 or 6, that's telling us that this unprecedented level of government bond supply is having an effect. And it's effectively saying that we backstopped the financial system and we took the systemic risks out of the banking system late last year, and we've shifted the crisis point from the banking system to public finances. Unfortunately, here in Australia, even though our debt profile isn't quite as severe as that in the US, our interest rates are surging. In fact, the US bond yields have rallied or fallen in the last couple of weeks, and ours have continued to rise. And that's quite a concern, because that tells us that there isn't the demand for the government bonds, or there isn't that savings pool that the government can easily tap into. And that's a worry for borrowers as term rates rise.
Warren, at what point do you think policymakers can start considering an exit strategy, start considering rolling back some of these crisis countermeasures they've implemented?
Well, the big question is, can you unwind these unconventional policy actions, and there's a whole myriad of them in the United States and in Europe, before you can start tightening monetary policy. One of the things in the medium term, and I'm talking about the next 5 to 10 years, that's absolutely critical is that the moral hazard implications of these bailouts are such that the discipline that policymakers are going to have to hold on to over the next 5 years and constraining monetary growth is absolutely paramount, or else we're just going to have a rerun of all these problems again down the track. And of course that means that interest rates are going to have to go up globally once the economy starts to improve. But you know, can you easily unravel all the support for the financial system? And the answer is we don't know. This is going to be very tricky. How to sequence it, how to gauge it is going to be very difficult. Fortunately, here in Australia, we still have a reasonably conventional policy approach. In terms of timing, I can't see a reversal or a tightening of any of these policies for at least the next year or so.
Okay, I just want to put the same question to Senator Coonan. How long should the government be in crisis mode and should remain vigilant? And at what point, Senator, do you think an exit strategy ought to be considered?
Well, I think that's one of the real concerns, is that it's certainly not clear how you actually wind back these massive government interventions that we've seen in Australia. We've seen it underpinning the banking sector. We've seen it with packages, for example, car finance, car dealers, that's caused a major political scandal in Australia. Obviously, if you're going to have these sort of massive interventions and government underpinning whole sectors of the economy, you have to be very careful as to how that's all administered, and you've got to have some exit plan in contemplation. Now, recently, Treasury was asked at our Senate estimates how they would actually see the bank guarantee being unwound, and the officer said something like, we don't know what the new normal will look like. So clearly in those circumstances, it's going to be hard to see how we will go back to what we used to understand as the conventional way in which the market operated. But clearly it's unsustainable to keep government intervention underpinning so massively big sectors of the economy.
All right, Senator Helen Coonan, Shadow Minister for Finance, thank you very much for your views this morning, and Warren Hogan from ANZ joining us.